Hi, and welcome to another edition of CMS Forex News. My name is Christina Robinson, and today is Tuesday, April 22nd, 2008. In U.S. fundamental news, existing home sales fell 2% during March to an annual pace of 4.93 million, according to the National Association of Builders. Despite lower interest rates, some potential buyers continue to face restrictive lending practices, while others are bidding their time with a large number of homes to choose from. The price of an existing home was down close to 8% from last year. The Richmond Fed Index showed that manufacturing activity declined further in April. It fell to a measure of 0 from 6 in March. Factory shipments and orders softened and employment contracted again. Furthermore, respondents' outlook for the next 6 months deteriorated even more. The euro climbed to a new record high against the dollar, breaching 1.60 for the first time and hitting some resistance at the 1.6020 level. Overnight, the pair climbed on the back of more hawkish comments from ECB officials. Governing Council member Christian Noyer signaled policymakers may rise interest rates if consumer inflation doesn't slow. In New York trading, following the U.S. releases, the euro capped its 170 pip rally that started at the session low. Since Friday's low, the pair has swung almost 300 pips. The pound took advantage of the dollar's weakness and pared its losses from yesterday's session. After hitting a low overnight at 1.9750, the pound rallied 250 pips during European and New York trading to test the 2-to-1 level. Here the pair found resistance and the dollar strengthened slightly. The dollar also fell lower to the Swiss franc and Japanese yen. The franc compared its Friday's losses yesterday, and today it tested the parity level after a strong swing at the New York Open. The pair found support there and rebounded slightly as the New York trading session progressed. Carry trade sentiments were weak as U.S. stocks opened lower as financial earnings reports showed more bad news than good news. The Bank of Canada lowered rates by 50 basis points to 3% today. In the statement, policymakers pointed to the sharp slowdown in the U.S. economy and the effects it may have on the Canadian economy, such as lowering exports. The statement also cited tighter credit conditions as a factor in moderating business investments and consumer spending, and the need to offer stimulus with this cut. The loonie fell on the news, with the greenback testing 1.0150 in the hour following the release. As markets digested the release, expectations may be for the bank to slow its pace of interest rate cuts and to move to the sidelines once the rate reaches 2.5%. A new record high for oil prices this time, above $118 per barrel, also boosted the Canadian dollar as it pared its earlier losses and found support near 1.0025. Tonight, Australia will reveal consumer prices data. Overnight, Germany and the Eurozone will post preliminary measures of services and manufacturing PMI. The UK will release the Bank of England meeting minutes. Finally, we'll also get data on the industrial orders from the Eurozone. Tomorrow, Canada will reveal its retail sales, while the U.S. posts existing home sales. In the afternoon, the Reserve Bank of New Zealand decides on interest rates. And that completes today's news. Thanks for watching. Join us again tomorrow right here at cmsfx.com.